I hope everyone has joined this online session. This is a financial statement analysis model relating to your credit management diploma course. My name is Asanka Lienege. I will give a bit of introduction about myself before I start the session. Uh, I am working for a private bank. I will let you know the name of the bank, Sampath Bank PLC, as a assistant general manager, internal audit, and I'm a qualified chartered accountant with a first class degree from University of Jayawardenepura, and a qualified banker, and a qualified certified management accountant. Uh, and I completed my MBA at PIM, and that is a bit background about myself. You also want to know lecturer's background before you learn the subject. And if you take the subject itself, the particular module for relating to your course, there will be a compulsory question for 30 marks, which is compulsory. You have to complete that question. Anyway, as a credit manager or relationship manager or credit officer, whatever it is, you need to know about accounting before you analyze the financial statement of a, particular borrower. That is the whole purpose of having this particular model in this course, and being the question being compulsory. You have to have a bit of accounting knowledge, not bit, but have to have a sufficient accounting knowledge for you to analyze the financial statement of a particular borrower. Right. If I go to straight away the subject itself, I would like to ask a question before I uh, start the particular session. Uh, I know for sure you might have a bit of accounting background under you, since you are doing credit area in your respective branch or department, overall in the bank itself. Uh, if I ask us very simple questions, there is a text box, you can answer the text box. If you want, you can unmute your mic and answer the question, or otherwise you can, without disturbing others, there is option in the text box, you can write down the answer, right? My question is, you all know there is a closing stock. Everyone's financial statement, an item called closing stock, right? Normally, it appears in the current assets in everyone's balance sheet or statement of financial position. There is an item called closing stock, right? My question is, when closing stock increases, what will happen to the gross profit? When closing stock increases, what will happen to the gross profit? That is a kind of an introduction for this session. I would like to know your answers in the text box. What is the impact when closing stock increases on the gross profit of that entity? Whether it is increase or decrease. Only two
Decrease.
answers. So there is no impact.
Decrease. Decrease.
When closing stock increase, what will happen to the GP, gross profit? Increase or decrease?
GP reduce. Decrease.
There are some answers. profit will reduce, decrease, increase, decrease.
Will increase.
If it is a physical class, I will definitely get your everyone talk about the questions, but in an online class it's very difficult to get everyone's feedback. But make sure that you give your feedback, because in the classroom itself you can make number of mistakes, but when it comes to exam you cannot make mistakes because you will get fail. But you have to test yourself in the classroom itself. There is no person to laugh at you. You can make any number of mistakes. I ask a very simple questions. What is the answer in your mind? There are number of decreases here and there. Somebody says increase, or there can be answer. There is no impact, right? There is no relationship between the closing stock and gross profit. You can say there is no impact. I want to know the impact to the gross profit, not the debit or credit, whether it is gross profit increase or decrease. All right, okay. Therefore, profit increase, right? Final answer, right? Okay. What is the correct answer? There cannot be a gross profit increase or decrease, or a bit increase then decrease. Those kind of answers cannot be there. But whether the definite answer should be there, whether it is increase or decrease. Closing stock එක වැඩි වුණාම gross profit එකට මොකද වෙන්නේ? ඒක තමයි මගේ ප්‍රශ්නේ. Because I want to know kind of a pulse or the accounting backgrounds, asking these kind of questions. Then I can start my sessions at the correct point as far as accounting knowledge is concerned. Right. The bulk, more than 95%, more than, I think, more than that, 95 to 96, 97% says when closing stock increase, gross profit will get reduced. Right? ගොඩක් කට්ටිය කිව්වේ closing stock එක වැඩි වෙනකොට gross profit අඩු වෙනවා කියලා. Right. Okay. The correct answer is when closing stock increase. When closing stock increase, your cost of sales will get reduced. Right? When closing stock increase, closing stock is not item that we have sold. Otherwise, we cannot call that item the name closing stock, no? Right? Therefore, it has not been sold. Therefore, we have to reduce, or we have to deduct it from the purchases when we calculate the cost of sales. As a result of increase in closing stock, your cost of sales will get reduced. Then GP is a result of sales minus cost of sales. GP equal gross profit equals sales minus cost of sales. When closing stock increases, your cost of sales will get reduced. As a result, your GP will increase. Your GP will increase. Right? There is a negative relationship between the closing stock and the GP. Right? Closing stock and the GP. I will further elaborate in later sessions. Right. Okay. Then my second question. Thank you very much for your feedback. Very important, right? Now, if I recall some memories when I marking, when I am to mark your answer sheet, I'm a kind of a lecturer. I'm not a strict lecturer. Uh, to fail the student, and I don't have any mindset to fail the students. I normally set the question paper very straightforward. Student will know if you have participated for my lectures. He or she will definitely go through the exam, right? But if I recall, in some cases, right, when I start marking a question paper, in my mindset, I I was trying my level best to pass that student, but unfortunately, the students are trying their level best to fail the exam, right? Even though I was very hardly trying to pass these students by giving marks, right? Wherever possible, some students were trying their level best to fail the exam, right? I don't have in my hand currently, I don't have any answer sheet, but if I can show you one or two examples, only a single sheet, nothing is written, right? When you are to calculate some ratios, the name GP ratio is only there, right? Therefore, there are some category of students, they are trying their level best to fail the exam, right? When you get this certificate, you should have some knowledge in analyzing the financial statements of a particular entity, right? Therefore, there should be a balance, right? When we pass you as a certified student for credit management, we have to have that kind of a threshold to pass the exam. Therefore, make sure, I will make sure if you can participate effectively for these 4 sessions, definitely you are in a position to pass the exam. Not only that, taking into account the answers that you have given for my first questions, I know for sure there are a lot of students or people who have not studied accounting as a subject in their A level. That is one thing. And the second thing, there can be students who have sat for A levels in the accounting stream, but long ago they have now forgotten everything, right? Now, the importance of accounting for a credit manager or credit officer or relationship manager is of utmost importance now, right? It has become one of the main things for a credit manager, because when those days accountants or the accounting background people only did the accounting, but nowadays if you are dealing with individually significant customers, definitely your bank will involve yourself for that calculations. Now it has become part and parcel of the credit departments. The preparation of the financial statement, they are also part and parcel of the process. They also got involved in various cases in calculation of probability of default, loss given default, individual impairment calculations, right? Now, on the other hand, the account set provided by your client will have different technical jargons like SLFRS 9, like impairment, like amortized cost, whatever it is, right? Therefore, for you to do a proper analysis and to come up with a good conclusion and to provide the relevant data to particular approving authority to take the correct decision. Now, last week there was a credit manager called me and asking questions. There is a group where your equity is like 15 billion, but whereas to take the holding company, their equity is like uh, 30 billion. How this 30 billion came down to 15 billion when you consolidated the financial statements? That is a question he raised because he one of my subordinate in the previous day, he asked that questions, right? Therefore, you have to have a kind of a understanding of the financial statements that your clients normally provide for financial facility. In a review, right, and in a new facility, you have to have a good knowledge in accounting. Now, the knowledge in accounting for credit managers has become very important, right? Okay, right. With that background, we'll start the sessions. I have uploaded the notes. If you want to disturb me, you can unmute the mic and ask any questions, or you have a chat box. You can ask any questions via that chat box also. And there will be 4 sessions. First sessions, I will give a bit of background of accounting for the benefit of the all the students who are in there, because definitely you have to have a good knowledge in accounting. Otherwise, the things that I will elaborate in the second and third session will have nothing material to you, because very important, you have to have a good knowledge in accounting, at least a basic knowledge in accounting to understand the calculation that we are going to do in the second and third sessions. Therefore, make sure that you participate all 4 sessions very effectively. Then you are in a position to complete these questions, compulsory questions, and pass the exam, right? Without completing this particular module, you cannot pass the exam. Therefore, this is a very compulsory, even for everybody in this group. And the other important message is, even though I was asked to do these particular sessions due to my busyness, normally I am very reluctant to conduct the sessions at IBS. Normally, I am doing the business accounting for compulsory subject for the IABF students. But now, because of my schedules, this has become now I don't find any time to complete this thing. Therefore, next week onward, I will start the sessions at 7 a.m. without any break. I will go till 10:30. Right, that is the arrangement. You have to log in 7 a.m. next week onward. Will go till 10:30. Then you also will be free on Sundays. I have some other works also. Therefore, make sure that you logging into 7 a.m. next week onward for my sessions. For other lecturers, they might have the normal time 8:30. You will beforehand inform the starting time, but for the benefit of all the people, I will again say, next week my session will start at 7 a.m. and will go till 10:30, right, without any breaks. Right, okay. I'll screen the presentation. There are a few questions. That okay. Right. I think you can see my screen.
Yes, sir.
Yes, sir.
Objective of financial accounting and basic accounting concept. Under this particular topic, I would like to give some basic background on the accounting, what is called accounting, the definition, role, interested party, categories, and concept. Then we have to get a basic understanding about the base on which the accounting subject evolved, that is the double entry system, right? And other things, right? Right. If you take the definition of accounting, I would like to give a brief on this definition as well. Uh, Now, accounting is a process where in a business organization you can find lot of events and transactions. Uh, in this particular course, I will normally take example from the bank. If you take a transaction, customer comes, deposit money, that is a transaction. If a customer comes to the counter and withdraw some money, that is a kind of a transaction, right? Uh, if a customer comes and deposit material amount in a fixed deposit, that's a kind of transaction. Um, if an ATM withdrawal is done by a customer, that is a transaction. If you give a loan, that is a transaction. If you open a LC, that is a transaction. These kind of lot of transactions are happening in a single day. Therefore, one cannot remember all these transactions, right? Then come accounting as a subject. Accounting is the subject where you collect all of these transactions. You first collect, then you record all these transactions. There should be a mechanism to record. Then you classify based on a particular basis. Then you summarize, then you analyze, right? After that, you interpret and distribute it among the interested parties to take economic decision on the entity. Why we do have the accounting? To facilitate all the important information to the interested parties to take economic decisions. Otherwise, the interested parties on an entity cannot take these decisions. Therefore, accounting is the whole process, right? I will recall again the definition. In a business organization, there are a lot of transactions happening in a day, right? Like I mentioned, depositing money in a bank, depositing money, withdrawing, giving loans, opening LCs, ATM withdrawals, depositing money in the cash deposit, right? Giving a credit card, customers having credit card transactions, right? All of these transactions are happening in a single day. Therefore, accounting is the process where you collect all these transactions. There should be a mechanism to collect. Then you record these transactions. There should be a mechanism to record these transactions, right? Then you have to classify. Every transaction is not in the same nature. If you take a deposit also, fixed deposit, current account deposit, savings account deposit. If you take the savings account, it can be a minor, it can be a teenage, it can be a normal saving, it can be a senior citizen, right? Therefore, you have to categorize those things. You have to classify. Then after all recording of these transactions, you have to get a summary. Then where needed, you have to analyze. Where needed, you have to analyze. Thereafter, you have to, after you analyze, the outcome should be interpreted. You have to interpret the outcome. After that, you have to distribute among the interested parties to take economic decisions. Otherwise, the analyzed data is of no use, right? Therefore, you have you have to distribute the analyzed data to interested party to take decisions. This is the whole process of accounting, right? In the exam, there won't be any question to define the subject of accounting, but you have to understand this. Because I normally start with these things because the knowledge in accounting is very minimal when it comes to certain categories of people. Now, not only yourself, if I ask another questions, right? I hope you have gone through the balance sheet or the statement of financial position of your bank, right? If I ask a question like this, what is the biggest asset in your balance sheet? In a bank balance sheet, what is the biggest asset? You can give the answers in the text box. What is the biggest asset in your bank balance sheet? I'm waiting. Lending, loans, advances, loans and advances. If you have an answer in your mind, please let me know, because whether it is right or wrong, you don't know. If you want to clarify anything, you have to give me the answer. If someone says loans and advances, if you don't agree with that, please give a different answer in your mind. If you agree with that, you can say the same answer, but if you have a different answer, you can say a different answer. I want to know the biggest asset in your bank balance sheet. Still, I didn't get the right answer. Right. Right. Bulk has more than 95% of the answers are correct. In a bank balance sheet, the biggest asset is loans and advances. Right? If you take a bank balance sheet, more than 85% comprised of loans and advances. That is the biggest asset in the bank balance sheet. Then what is the biggest liability in a bank balance sheet? What is the biggest liability in a bank balance sheet? Right, very good. Most of the people have given the correct answer, and I very appreciate your positive feedbacks. Right now, normally when I conducted some lectures, it's very difficult to get some feedback from the students. Right, this is not මේක බණ පන්තියක් නෙමෙයි, right? බණ කියන හාමුදුරු බණ කියන. එතකොට there is no two way communications. හාමුදුරු බණ කියනවා. ධර්ම සාකච්ඡාවක් වුණොත් තමයි මේ අපිට ප්‍රශ්න අහන්න පුළුවන්. නැත්තම් බණ කියනවා අපි අන්තිමට සාදු සාදු කියනවා. But this is not a preaching bana, right? Therefore, you have to have a two-way communication with the lecturer. I might also not know everything, right? I am not the perfect person, right? If you ask any questions, if I don't know, I will say I don't know. I will check with some other person and let you know the correct answer, right? Very positive feedback. Yes, good. Deposit is the main liability. If you take the liabilities of a bank, more than 95%, 90 to 95% are from deposits. Right? We'll we'll detailedly discuss these things in future slides. Thank you very much. Right. We'll move to the slides again. Therefore, the accounting definition of accounting, it says all the transactions that are happening in an organization, there should be a process of collecting those things, process of recording, classifying, summarizing, analyzing, interpreting, and distributing among the interested parties to take economic decisions. That is the whole process of accounting. This is also called, the accounting also called, the subject of accounting is also called the language of the business, right? Language of the business. If you take the global language, we call English is the global language because everybody understands the language of English. Therefore, you can communicate with anybody. But if you take the language of business, why we say language of the business, the financial statements of a Sri Lankan company can be understood by a businessman in UK or businessman in USA. Same thing will happen here also. The financial statements of a UK company or USA company should be effectively understood by the businessmen in Sri Lanka. Because accounting is done throughout the world in the same way. Therefore, we say that is language of business. Right. There are accounting standards, we will come at a later stage, right? Based on which people prepare accounts. The accounting standard for a USA, UK and Sri Lanka, there is no much differences. Even though there are some differences, the logic and the basis is same. Right? Therefore, the understanding is not that much of difficulty. Therefore, we say the accounting is called the language of business, and the people who practice the accounting is known as accountant. Or in a company, we might say that is finance manager, that is chief financial officer, CFO, or group finance officer, right? GCFO. Right, or finance director. There can be different designation based on the experience and the knowledge and the service that the particular person provides to the entity. Right. In a business organization, we have to identify the activities of the business, then the recording should happen, and finally the communication should be there. Right? This is what accounting does. Now, the parties interested in the accounting information or the interested parties for business organizations financial statements, right? If you take the external users, lenders, right, like you, right, your people, lenders, when these your customers, your borrowers come to you to ask financial statement before lending them, right? Then shareholders, government like Inland Revenue Department, the customers would like to know when they deposit money, they would like to know the financial position, financial performance of the bank. Normally in a branch, you have to show them or you have to visualize the financial performance in a screen, right? External auditors, consumer groups. Then when it comes to internal users, your management, managers, sales staff, officers, budget officers, internal auditors, controllers, right? Lot of people are interested in the financial statements. These financial statements can be of bank financial statement, it can be of branch banking, it can be of corporate banking, it can be of zonal wise, it can be of regional wise, it can be a particular branch, particular unit, say Avisavela branch financial statements. Right? Therefore, a lot of people are interested in financial or the accounting information to make various decisions. Not to only make various decisions, but to also assess the decision made by them in previously, whether those decisions are correct or not. Right? If you do have any questions, you can ask. Otherwise, I will, if you clear up to now, if you do want to ask any questions, you can ask. The language is not a barrier. You can use any language. ඕන භාෂාවකින් කතා කරන්න. The important thing is you have to clarify yourself before going to exam. Right? The mama papers බලනකොට මම try කරනවා කොහොම හරි මේගොල්ලෝව pass කරන්න. But paper එක ලියපු කට්ටිය ඒගොල්ලෝ they are trying their level best. Level best ට වඩා වචනයක් තියෙනවා නම් ඒක වචනේ use කරන්න පුළුවන් to fail the exam. කොහමද ලකුණු කීයක් හරි දෙන්න අපි බලාගෙන යනකොට ඒක හරියන්නේ නැහැ. Right, okay. We'll move to the next slides. ඔයගොල්ලන්ට මේකෙදි මේ breaks දෙනවද මේ කලින් ආපු lecturesලා? ඔයගොල්ලන්ට සාමාන්‍ය break එකක් දෙනවද නැත්නම් එක දිගට 8:32 කරනවද දිගටම lecture එක?
break එකක් දුන්නා සර්.
කවුරු හරි කියන්න පුළුවන් නැත්නම් මේ ටෙක්ස්ට් එකක් හරි දාන්න.
normally break එකක් නම් දෙනවා 10:30 to 11 10:30 to 11 අතර වගේ
yes we get breaks. කවුරු හරි කතා කරනවා මට ඇහෙන්නේ නැහැ.
සර් ඇහෙනවද?
පොඩ්ඩක් දැන් කතා කරන්නකෝ. right okay.
හර්ෂ කතා කරන්නේ?
ඔව්.
ඒක normally sir 10:30 to 11 අතර වගේ 15 minutes break එකක් normally දෙනවා.
right okay.
ඒක තමයි තියෙන්නේ.
මම හිතුවා 10:30 to 11 කිව්වම පැය භාගයක්ම දෙනවද දන්නේ නැහැ කියලා. right okay right.
නෑ නෑ.
okay. විනාඩි 15ක් වගේ දෙනවනේ.
yes yes.
right okay right. thank you right okay. Right we'll apply the same but the next week onward the lecture will start at 7 a.m. There won't be any breaks. We'll go till 10 to 10:30, right? Okay, right, okay. මේකේ මේ ඔන්ලයින් එකේ තියෙන ගැටලුව තමයි ඔයගොල්ලෝ දැන් මේක දාගෙන ඔක ඉන්නවද නැද්ද කියන එක අපිට බලන්න බෑ. නමුත් make sure that you are there. Otherwise the final results will let you know the efforts that you made in the actual sessions, because the all what I am preaching here will count for the exam, right? Right. Then role of accounting. If you take the role of accounting, business organizations are for profit maximization. Profit motive is there, right? Whether you have made a profit or not, you have to ensure that, right? Whether you have made a profit or not, you have to ensure that. Otherwise, it can be treated as a normal association where you only take the welfare of the particular members. But normally businesses are for profit maximizations. And therefore they need to keep track on the return on investment. Otherwise, if the return is not there, if it is not tracked, until the business get bankrupt, they won't know. Right? You can see in small outlets where people start their business at the inception. There can be music, there can be lights, there can be others, and lot of noise is there. After 1 or 2 months, you cannot see the business there, because they don't have any track record to keep the income and expenses and the assets and liabilities. No track records at all. We can see the starting of business. We can see some people are there. After 1 or 2 months, the business automatically got dissolved. Therefore, every business organization need to keep track on the return on investment. Otherwise, we don't know where our direction is, right? Then not only that, keep track on profit and loss of the entity. Whether we are making a profit, whether we are making a loss, profit, the loss, the මොකක්ද කියලා දැනගෙන යන්න ඕනේ යන පාරක. Right? Then not only that, keep track on asset, liability and equity of the entity. And keep records on income and expenses. For a moment, you think that in your bank, there is no core banking system. We are not recording our customer transaction in the system itself. What will happen? In the morning, customer A comes, he deposit 50,000. There is a teller called X. He memorized that thing in his head. Customer A will 50,000 දැම්ම කියලා එයා ඔළුවේ තියාගෙන යනවා. ඔළුවේ තියාගන්නවා. Then after 10 minutes, another customer comes. Customer B, he withdraw 25,000. I tell X, එයා ඒකත් ඔළුවේ තියාගන්නවා. Another customer comes. He pawn his articles. Right? Likewise, a variety, different transactions will happen in minutes. අපි ගන්නකෝ credit card transactions. If you take the credit card transactions, 24 hours, 365 days. Within Sri Lanka, outside Sri Lanka, every minute a transaction happen. If you take the ATM transaction, 24 hours. Right? What will happen if you don't have a bank does not have a facility to record or keep track on all of these transactions? That's the role of accounting. Your core banking system is the accounting, right? If you don't have that, the role of accounting via that core banking system, banks will in a deep trouble. They don't have any records on their asset, liabilities, income, expenses. After 1 or 2 months, the banks will get collapse. Right. If you do have any questions, you can ask now. Right. Okay. Normally, I will ask in the online session also. I will allow people to ask questions. Right. We'll go to the slides again. That is the role of accounting. Right. Then I'll move to the accounting as a system. Right. If you take the subject of accounting, accounting also a system. Normally in a system, there are three parts: inputs, actual process, then outputs. You have to have some inputs to a machine. Then all the inputs, materials will get processed in that machine. Then there can be outputs. Sabang kete dia teno. Right? It was a kole kotala asan take pack pela. Likewise, accounting also a process or system. There are inputs, there is a process, and the tangible outputs are there. Right. And normally these outputs will be consumed by the customers of accounting or interested parties to accounting. Likewise, there are a list of parties who are interested in the accounting system outputs. Normally, if you take a normal products, there are customers. Similarly, you can see for accounting also the system what we produce on the accounting, there are a lot of customers are there. I already mentioned there are internal parties, external parties who are interested in the outputs of accounting. Actual owners, managers, customers, employees, inland revenue department, lenders, various research people. A lot of people are interested in consuming these outputs of accounting system. Right. First, we'll focus on the inputs of accounting system. The main and only input is the event and transactions happening in a business organization. All the events and transactions that are occurred in a business organizations are the inputs for the accounting system. Then the process. What is the process? Collecting those information, recording those information, classifying, summarizing, analyzing, interpreting, and distributing those final accounting information. That is the actual process. Then third one, outputs. What are the outputs? In accounting system, the main output is the financial statements of that entity. Financial statement of that entity. If you take the financial statements, there are 6 components. According to LKS 1, Lanka Accounting Standard 1, there are 6 components to the definition of financial statements. First one is the income statement. IS means income statement. Normally, previously we knew or we call that statement as P&L, profit and loss account. Right? Income statement also now we prepare under 2 categories, that is normal income statement and other comprehensive income statements. Other comprehensive income statement. Both together we call comprehensive income statement. Comprehensive income statement has 2 parts. That is, first part we call income statement, which report normal income and expenses of the organization. The second part is the other comprehensive income statement, which is used to record the capital nature, income and expenses, plus other categories of certain accounting information. But for the time being, you can memorize, you can post this is as a income statement, normally we call P&L. Then the number 2, statement of financial position, SOFP, statement of financial position. Previously this was known as the balance sheet. කලින් අපි කිව්වේ මේකට balance sheet කියලා. Then the third one, CFS, cash flow statements. Then the fourth one, statement of changes in equity, SOCIE, statement of changes in equity. Statement of changes in equity. Then accounting policies, APN means accounting policies and accounting notes. Accounting policies and accounting notes. Then apart from the financial statement that is being the main output, there can be certain management reports and other reports. If you take an example for a management report, in a bank, every month a board meeting is happening. Board would like to know there was a leasing campaign in the previous month. What is the current status? Whether due to the leasing campaign, our leasing portfolio increased or decreased. If it is increased, what are the zones who have performed well? What are the branches who have performed well? That is a kind of management report. Right. Therefore, accounting as a system, there are inputs, process, and outputs. If you have any questions, you can ask now. Please repeat output again. Okay. If you take the output of the accounting system, දැන් අපේ බැංකුවක් ගත්තාම accounting system කියලා කියන්නේ Finacle core banking system. Normally Finacle is the most popular core banking system in the almost all the banks. There can be other core banking systems. तर core banking system එකේ අපිට එළියට එන අපි ඒකේ තියෙන use කරගෙන අපි හදන main output as a accounting system, the main output is the financial statements of the bank and financial statements of the entities like branches, department, or the financial statements. To take a normal business, normal trading business, there should be a proper system to record the transactions. Otherwise, the financial statement you cannot prepare. Right? To take the main financial statements, according to LKS 1, Lanka Accounting Standard 1, there is a standard. We will come to later. There are standards, right? Why we have standard? What is the purpose of having standard? What is the role of standard? We will let you know in a later stage. To take the financial statement, there are 6 components. First one is the P&L or the income statement. Second one is the balance sheet or the statement of financial position. Third one is the cash flow statements. Then the fourth one is statement of changes in equity and accounting policies and accounting notes. That is the main output of the accounting process. Every business organization should have a proper accounting process to generate this final output, that is financial statement of that entity. Normally bank use core banking system. Similarly, some business organizations use different software to track, to collect information, to record, to classify, to summarize, to analyze and interpret and distribute. Then there can be various other management reports. Apart from the financial statement, there can be various management reports. Board might ask, what is the deposit CASA portfolio of branch banking. That is a kind of management report. Then finance or any other department will have to prepare branch wise what is the current account balance, what is the savings account balance. You have to give previous month figures. You have to give budgeted figures. You have to give previous year's figures in the same month. Right? There is a kind of a management report. Right? I hope now you have clarity on that thing. Any other questions? Any other questions before we move to the next set of slides? Right, okay. This is also very important. Interested parties for financial statement. In the previous slide, I said the main output is the financial statements. Main output is the financial statements. Then right. The main output is the financial statement. Then who use these financial statements? Who use these financial statements? For what purpose? Those people are called interested parties for financial statements. Interest parties for the financial statements. So take the first party, the owners of the entity. Every entity has owners. In Sri Lanka, there can be mainly three types of business entities: proprietorships, partnerships, and companies. In a proprietor, there is a single owner. He worries about his business financial statement. He want to know whether the entity making profit or not. Then, if you take the second category, partnership also, there can be 2 or 3 partners, there can be 10 partners, there is a maximum limit for partnership number. All of these partners worried about the financial statements of the partnership. The only way they can get to know about the profitability of the and the financial position of the entity is going through the financial statements. Right? There is no other way. If you don't record, if you don't collect the information, you cannot have a system of finding your profits or assets and liabilities. Therefore, owners are very interested in going through the financial statements of their own entity. In a company also, the owners are called shareholders. There are a number of shareholders. If you take a bank, there can be 20, 30, 50,000 shareholders. They are worried about the bank's financial statements because they want to know the profit, they want to know the dividend, they want to get the return, they want to know whether we sell these shares or whether we reinvest, maybe buy some more shares. All of those decisions will depend on the results produced by the set of financial statements. Right. Then the management team. Why management team worried or interested in the financial statements of an entity? For 2 things. First thing, they want to reassess the they want to reassess the decisions made in previous occasions by analyzing the results of the financial statements. Whether we made the correct decisions, whether our decisions was correct or incorrect, whether it reflect the results in the financial statements. That is for one thing. Then the second thing is to plan for the future. When you want to plan for the future, you have to go through the current set of financial statements. Otherwise, you cannot plan for the future. Now, we are in the month of September. In 2 or 3 days, we will go to the month of October. Now, these days, people are preparing their budgets. If you are a brand manager, if you are a credit manager, if you are a relationship manager, your department head, your zonal manager, your regional manager will ask details for the 2022 budget. 2022 budgets. Therefore, the management team also will prepare their next year targets based on the financial statements of the current year. Right. Then prospective owners, potential investors. If you want to buy shares of a particular company, whether, for example, assume it is a listed company, you want to have some investment in the share market, you have to select a company. What is the only source of information for you to take that decisions? You have to download the financial statements of that particular entity and analyze whether it is a good company or a bad company, whether it is a very technically sound company, whether my investment is safe, whether I can get a reasonable return by having this investment. All of these information you can collect by going through the financial statements of that particular entity. If not otherwise, you have to go to that company. I don't think they will allow you. You have to visit those companies and visit the factories, outlet, everything. Ultimately, your expenditure related to visiting those, collecting information will be higher than your investment. Therefore, there are free information in the CSE website for every listed company you can download. Before you make investment, you can go through those things and have a very profitable investment with those things. Therefore, potential prospective owners are also worried about the one company's financial statements. Then lenders like creditors and lenders like your people, right? In a single day, for a month, lot of people come for branches, departments for lending facility, asking lending facilities, right? You may gather different qualitative information, but the main source of information to establish the repayment capacity, of that particular borrower, you may ask the financial statements of that entity. Right? Whether our amount that we are going to lend can be recovered or plus the interest, right? To make a decision, that kind of a decision, you have to have the financial statements of that particular borrower. Therefore, lenders and creditors are also worried about. And customers, especially in a bank, the customers of a bank, customers of a financial entity, customers of a particular business organization, before making their deposits, they want to know the financial statements, whether a particular bank is making profit or whether that in deposit is safe or not, to have a conclusion. And central bank also emphasize on this matter, and they instructed by way of a directive to show or publish in the business places the financials of the recently concluded financial year of that entity, whether it is a financial institution or a bank, right? If you go to branches, you can see the financials of that bank. Then government agencies like Inland Revenue Department, in order to collect taxes, they also ask for financial statements of business organizations. Then employees and unions, they are also worried about the financial statements of a particular entity. For employees, whether my job is secure, whether I want to change my job, whether I would like to stay in this organization, that kind of decisions can be taken by way of analyzing the financial statement. Not only that, taking into account the other aspects, but they also can get to know about the financial performance and position of the entity. Then union to when it comes to salary negotiation, bonus, various benefits, they also would like to know the financial statements. And various research analysis, they also go through the financial statement of various entities before making any research reports. Any questions? Any questions? Right, okay. The next topic is categories of accounting. Under categories of accounting, there are three main categories: financial accounting, management accounting, and cost accounting. To take the financial accounting, that is we normally study for your sessions. 99% of the materials we use under this financial accounting and the knowledge we share, also the 99% is for financial accounting. Then management accounting and cost accounting, if you take, those are for future and futuristic things. Financial accounting, under financial accounting, we normally talks about the past, not about the current, not about the future. What has happened, we will show you as a set of financial statement. Therefore, the main difference between the financial accounting and management accounting and cost accounting, management and cost accounting, we talk about the future and the current. But whereas the financial accounting, we talk about the past. To take about the past, now for example, we prepare financial statement for the year ending 2021. In 2022, there was a question. Sir, can you explain the impact on rating agencies being an interested party, right? Okay. Now, if you take the interested parties, the rating agencies also will part and parcel of the interested parties. Rating agency, not only the rating agency, any research analysis, right? Any person, they will have to go through the financial statements, right? To get the rating also will largely be depend on the financial statements outcome, right? Not only that, they will take into account other categories, like if you rate a bank, they will take the bank's NPA ratio, bank's liquidity ratio, bank's capital adequacy ratio. That is also part and parcel of the financial information system, right? For you to calculate the NPA, for you to calculate the liquidity ratio, for you to calculate the capital adequacy, there should be a process or system of financial information, right? Therefore, definitely rating agency is also an interested party to the financial statement of an entity. Normally, if you take the rating agency, they will rate the large entities, not the small ones. They also use these financial statements in a big way to rate an entity. I hope I have answered the question. Then categories of accounting. Now when I am presenting my screen, I only appears the total screen of this presentation. If I have internet issue, it won't be will get identified instantly. But anyway, IBSL people will monitor that and they will inform if there is a kind of interruptions. We'll start with these categories of accounting. Now, if you take the accounting, there are three main categories: financial accounting, management accounting, and cost accounting. Financial accounting is the main category that we worried about under this particular course because we are analyzing the financial statements of an entity that will fall into the financial accounting. The main difference between the financial accounting and the other two, financial accounting always worried about the past. We are talking about the past under financial accounting. Whereas the other two accounting, that is management and cost accounting, we talk about the present and the future. To take the management accounting, one of the main functions of the management accounting, that is preparation of budgets. That is for the future. Then if you take cost accounting, one of the main functions, that is pricing of a product. Right? Those will take into account the future information, assumption, estimates, right? But whereas under financial accounting, we talk about what has happened and we record those things, what has happened and the results. The financial statement of 2020, year ending 2020, 31st December, will be presented in 2021. Therefore, the history has happened and gone, right? But we present, right? The main source of information for management and cost accounting will be the information of the financial accounting, right? I do not want to spend much time on these slides. If you are interested, you can go through the internet and take some things. Then the topic of the hour or today's main topic is the double entry system. Double entry system. If you do have any questions? Right, okay. I will check all on the internet connection in time to time. Right. Take the subject of double entry system. For a human to survive, there should be a heart. Likewise, that is the main body of a human being. Sorry, main part of a human being. Likewise, in accounting, the main part is, can be and must be and shall be the double entry system. Right. Without a double entry system, there is no subject of accounting. This famous concept, this innovation, this concept, this theory was introduced by Luca Pacioli in 1500. 15th century, famous Italian Luca Pacioli. He said, when it's come to recording of transaction in a business organization, you have to debit the transaction into debit side of in an account, and the same value you have to credit the same into another account. When you are debiting and crediting the same value, at the end of the day, your debit totals and the credit totals will get tallied. He introduced a mechanism, and we'll go to the next slide. The mechanism is tabulated here and depicted under the table, right? You can see. He said there are 5 main categories of accounts, namely assets, liabilities, income, expenses, and equity. He further said, for an asset account, the balance should always be a debit. Liability account, it should be a credit. For income account, it should be a credit. For expense account, it should be a debit. For equity account, it should be a credit. And he further explained, when due to a transaction, if an asset is increased due to a transaction, if an asset increase, we should debit that asset account. Similarly, due to a transaction, if the asset decrease, we should credit that account. When it comes to liabilities, increase, you have to credit that. Decrease, you have to debit that due to transactions. For income, increases credit, decreases debit. Expenses, increases debit, decreases credit. Equity, increases credit, decreases debit. Accounting is not a subject of by-hearting anything. Right? It's a very logical subject. You cannot by-heart anything under accounting. But you have to by-heart this double entry system, which is in the screen. You have to by-heart that thing. Right? This is also not very difficult. You can only memorize the categories. There are 5 categories: asset, liabilities, income, expenses, and equity. And the balance column: assets debit, liability credit, income credit, expense debit, equity credit. And the increase column is identical to the balance column. Increase column is identical to the balance column. Balance debit, increase debit. Balance credit, increase credit. Balance credit, increase credit. Balance debit, increase debit. Balance credit, increase credit. And the decrease column represents the opposite side of the increase. When it is increase debit, decrease credit. When it is increase credit, decrease debit. You can easily by heart. You have to only memorize the account categories and the balance column. The balance column will be identical to the increase column. Decrease column will be the opposite side of the increase. You have to correctly understand by heart the things, because the only debit and credit are there. 50-50, right? If you missed out one, there can be 2 errors, right? Therefore, my earnest request is to by heart this thing. This is the only thing you have to by heart and accounting, right? When a transaction happens, you have to take the nature of the transaction and categorize the transaction into these 5 categories, whether it is asset increase, whether it is liability increase, whether it is income increase, whether it is expense increase, whether it is equity increase or decrease. Then follow the double entry system and update the accounts. Right. The next part is to identify or get an understanding about the characteristic of an asset, characteristic of an liability, characteristic of an income, characteristic of expenses and equity. For you to correctly account, when you are analyzing a transaction which is occurred in a business organization, for you to get a correct understanding, you need to know the characteristic of asset, liabilities, income and expenses. Then you will realize, due to this transaction, an asset increase, an asset decrease, liability increase, liability decrease, likewise. Any questions? There are no questions means 2 conclusions. All of you have understood my lecture, what I was telling very perfectly, or nothing was understood. I hope the first category, since there is no questions. Any questions? Right, okay. Right. We will now get to know what are the characteristics of an asset for you to decide the double entry. Right? What are the characteristics of an asset? To take the main characteristic of an asset, it should generate some income to the organization and it should be owned by the entity. An asset, if you say for something that is our asset, that particular item should generate some income to the entity directly or indirectly, short term or long term, and it should be controlled and owned by the entity. Normally, assets are out of the 5 categories. I mentioned the 5 categories. These 5 categories, out of these 5 categories, asset, liabilities, and equity, those will be finally reported in the balance sheet or statement of financial position. Income and expenses will go to the income statement or the P&L. Now I am telling very important point. If you want to, you can write down those things. If you already know those things, no need to write down anything. Right? Asset, liabilities, and equity will finally get reported in the balance sheet or statement of financial position. Income and expenses will be reported in the income statement or the P&L. Right? Therefore, I am telling here under assets, asset should generate income to the organization directly or indirectly, short term or long term, and it should be owned and controlled by the entity. And the second point, assets are shown in the statement of financial position, that is in the balance sheet. According to double entry system, asset balance should be debit, increase should be debit, decrease should be credit. Assets can be categorized based on time, tangibility, and other bases. These are some examples for normal entities, normal business organization assets. Resources owned or controlled by an entity. Cash is an asset. Prepaid expenses is an asset. Land, building, equipment, inventory, vehicle, account receivable means debtors. Those are called assets. Then these are the categories of asset based on time. There are assets. Normally, if you take the time, we take 1 year. If it is more than 1 year, we say long term. If it is less than 1 year, we say short term. Or under accounting, current. If it is more than 1 year, we say non-current. Non-current assets, current assets. If an asset provides long-term income to the organization, we call those assets as non-current assets. Land and building, not only for a year. Machinery, vehicles, those are non-current assets. Giving organization long-term investments, long-term returns, long-term income. Right? Then කෙනෙකුට හිතෙන්න පුළුවන්, if you take land and building. Now IBS will also have a very I don't know the number of stories, the 13-story building. Right? ඒකේ කුඩු තියෙනවා. I said land and building, furniture, everything is an asset. අපි ෆිසිකලි ක්ලාසස් තිබ්බම ඕගොල්ලෝ ඇවිල්ලා පුටුවල ඉඳගෙන ඉවිල්ලා ගෙදර ගියාට පස්සේ කොහොමද සල්ලි හම්බෙන්නේ? පුටුවල සල්ලි තියලා යනවද? That is not right. That is not the way. To conduct classes, we have to have a building. To conduct classes, we have to have furniture. To conduct classes, we have to have AC machines. අපිට පාරේ තියන්න බෑනේ classes. Right? Therefore, asset generate directly or indirectly income to the organization. Right? Based on timing, if an asset generate more income to the organization more than 1 year, those assets are called non-current assets. If it is short-term purposes for day-to-day functions of the organization, we call those assets as current assets. Normally, current assets can be identified as inventories, debtors, cash. Those are the current assets. Then the second concept, tangibility. Based on tangibility, we categorize assets as tangible assets and intangible assets. Two categories. Tangible means you can touch, you can smell. If you want, you can throw it out. You can break it out. Those are tangible assets. For example, land, building, stocks, cash. Those are called tangible assets. 99% of the assets are tangible. And there are other assets which you cannot smell, which you cannot touch, but it generates income to the organization. Intangible assets. The main example is goodwill. Right? Even though goodwill you cannot smell, you cannot touch, it generates income to the organization. Similarly, debtors are also intangible assets. Debtors are also intangible assets. There is a particular person called debtor, but here we identify the debtor's due amount. අපිට debtor ගෙනහිල්ලා ගෙනල්ලා අපේ ව්‍යාපාරේ debtor කියලා ගෙනල්ලා තියාගෙන අල්ලන්න පොනිත්තන්න එහෙම කරන්න බෑනේ. Right? Therefore, debtors are also intangible assets. Then investments, fixed deposits. That is also an intangible assets. Right, okay. Then the other category, there are some assets called fictitious assets. Fictitious means bogus assets, not genuine assets. Right? අපි කියනවා ව්‍යාජවත්කම් කියලා. Even though we identify in the balance sheet this as an asset, it does not generate any income to the organization. This is only a temporary arrangement. Right? This is only a temporary arrangement. After some time, we have to write off this asset because it does not generate any income to the organization. Those are called fictitious assets. Right. Any questions under assets before we move on to the liabilities? Examples for fictitious assets. Right. I purposely avoid that example, but anyway, I will give an example. Right. When you have a material expense, say 10-20 million expense is there. That expense will give benefit to long-term purpose, like incorporation expenses. When you open a business organization, you have to incur certain set of expenses, right? That expense is for the entire life of the organizations, right? When you just start a business, if it is 10-15 million, but it is an expense, it should be charged to the P&L. Accounting standards will allow you not to charge directly to the P&L the entire amount. You have 5 years to amortize those expenses, right? Those kind of expenses, if we are to take that option, say 10 million expenses are there, either we can 10 million initially, we can charge the 10 million and have a loss in the first year. Or based on the accounting standards, we can charge by 2 million for 5 years. Therefore, we only charge only 2 million in the first year and we have a reasonable profit. The balance 8 million will get charged in the coming 4 years, 2 million each. In that case, in the first year, you only charge 2 million, but whereas you incur 10 million, there is a balance of 8 million. If you take an expense balance, it should be a debit, right? The only debit category in the double entry systems, apart from expenses, what is the only debit category? Assets. Liabilities credit, equity credit, income credit. Therefore, you are only left with asset category. Either you can select expense. We have not selected that thing because if we charge the 10 million for the first year itself will become a loss. Therefore, according to accounting standard, we took the second option where we thought of charging this 10 million by amortizing 5 years. Therefore, we only charge 2 million in the first year. The balance 8 million we have to recognize as a assets. The balance 4 categories only assets. We can recognize a debit balance as an asset. That is a kind of fictitious assets where you cannot generate any income to the organization. On a temporary purpose, we recognize this as an asset. Therefore, those unamortized incorporated expenses can be an example, good example for fictitious assets. Hope you understood. Any other questions? Yes, there are some examples given by Isra. Any expense unamortized can be treated as a fictitious asset. But you cannot let that fictitious assets lay in the balance sheet for years and years. There should be a proper mechanism to write off that fictitious asset. Any other questions? Right, okay, we'll move to the liabilities then. Liabilities. Liabilities are commitments, right? When you commit something, you have to repay. There are some commitments you cannot easily repay and get rid of it, like your marriage, right? In business organization, when you are doing business, you make commitments, right? When you commit, you have to repay it. Commitment items that are owed by an entity. Example, when you borrow something, you have to repay bank loan. Liabilities are shown in the statement of financial position. I said there are 3 items: asset, liability, and equity. All 3 items are shown in the statement of financial positions. Income and expenses will go to the income statement. Then the balance of a liability: credit, increase, credit, decrease, debit. Liabilities can be categorized on the time and the nature. Few examples of liabilities in a normal business organization: creditors claim on the assets, Bank overdraft, wages payable, taxes payable, accounts payable, creditors, right? Bank loan, right? Now, when it's come to a bank, I am asking another question. When it's come to a bank overdraft, what is it? When it's come to a bank or point of view of a bank overdraft, what is it? When I ask the question, what is it? Only 5 answers can be there. Asset, liability, income, expenses, and equity. Bank overdraft, what is it? Right. Most of the people, they have correct answers. Assets, very good. Now somebody said the current assets. In a banking organization, we don't have, we normally don't categorize the assets into current or non-current. Banks like balance sheet based on asset will be done based on the liquidity, right? If you go to a bank balance sheet, there are no current or non-current assets. Based on liquidity level of each asset, we categorize the asset. The highest liquid assets will be first listed, the lowest liquid assets will be lastly listed in the balance sheet asset category. If you go to bank balance sheet, the first item will be cash and cash equivalent. Then the last item will be fixed asset. You know the liquidity, the time that will take to convert an asset into cash. That is called liquidity under normal circumstances, right? You can convert some asset into cash urgently. For example, say if you have a 10 million car, if you say I will sell this car to 5 million, then it can be immediately liquidated. That is not the concept of liquidity. In a normal course of business, the time taken to liquidate or time taken to convert an asset into cash, if it is higher, you have a lower liquidity. If it is lower, you have a higher liquidity. When it comes to cash, already liquidated. When it comes to stocks, it will take very short a period of time to convert stock into cash. If it is land, if it is vehicle, it will take some time. For you to convert a land, a vehicle into cash, it will take some time. You have to put advertisement, people will come, buyers will come, they will give a price, there can be arguments, right? Bargains, everything. It will take some time, right? Therefore, in a bank balance sheet, there is no current or non-current assets. Only assets are there. Assets will be classified, categorized, line up based on their liquidity. The highest liquid assets will be listed in first. Thereafter, the lowest liquid asset will be listed in the latter stage. Go through a bank balance sheet, right? If you have time, don't go to Facebook, WhatsApp, Viber. Spend some time in your bank balance sheet today, right? You go to your bank website. The latest financial, the 30th June financials are there, right? Okay. Any other question? Right, okay. Everybody said the correct answer. Thank you very much. We'll move. Right. Therefore, bank overdraft from the bank's perspective, it is an asset. Why we say it is an asset? Bank overdraft will generate income to the bank. Interest income. That's the logic. Right. Then based on the nature, we say liabilities as internal liabilities and external liabilities. Right? The internal liabilities are also known as equity. Right? In accounting, this is a very important point. In accounting, normally we look at every transaction from the point of view of the business, not from the point of view of the owner. Right? Even though owner puts money to the business, we treat that as a kind of a repayment by the business in one day. Therefore, we take that as also as a liability, internal liability. Right? When you have internal liability or external liability, you have to repay in one day, but this owner's capital, equity, will be paid when the company liquidated. We don't know the date. There is a possible future for a company to liquidate. Normally, when you are doing lectures at your home, there can be some disturbance from time to time. I am also getting treated. I got a cup of tea, right? That's why I mute my mic and got it on the table. You may have your own breakfast, tea, and everything, right? But make sure that you always listen to my lecture as well, right? Therefore, I mentioned even though owner's capital, we treat that as equity, that is a kind of a commitment. From the business perspective, one day you have to repay that amount. That day we don't know. There is a possible future, but one day you have to repay. Therefore, it's a kind of an internal commitment, internal liability. We separate that liability and we have given a separate name called equity. And we have a separate category also. Even though in the big picture it is a liability, we say it is a internal liability and we have a different name called equity. But actual terms, liabilities are external liabilities. Normally we call liabilities, all those liabilities are external liabilities. Right? Apart from the owner, whatever the commitment we made fall to the external part. Right? Those external liabilities will have to be repaid. Before the company get dissolved, one day, before that day, some liabilities will have to repay very in short term, some will take 1 or 2 years. Right? These external liabilities based on time, we again categorize as non-current and current. Right? Internal liabilities, we have a separate category called equity. Right? When it comes to timing, we only categorize the external liabilities. Apart from the equity, what are the other liabilities? If it is a payment after 1 year, we call those liabilities as non-current. If it is within a year, we call those things as current liabilities. Right. If it is a long-term loan, we say that is a non-current liability. If it is an overdraft payable within 1 year, we say current liability. Any questions on the liabilities? Any questions? මං කියන ඒවා තේරෙනවද? මං කියන ඒවා තේරෙනවද? නැත්නම් තේරෙන්නේ නැද්ද? Can you explain the internal liabilities again? Yes, sure. Whether it is internal or external, liability means you have made a commitment and you have to repay that in a given date. Right? In accounting, we treat all transactions and we look all the transactions, we record all the transactions from the perspective of the business. You have to wear the spectacles of the own spectacles of the business, not owner spectacles, when you are recording the transaction in a business organization. Therefore, we receive money to purchase our assets in two ways. One, our owners put money. Second one, we can borrow some money. When owner puts money to the business, even though he is the owner, in accounting, since we are looking every transaction from the perspective of the business, we treat that as also a kind of a liability. One day you have to repay. Therefore, those things we treat as internal liabilities. There is no, currently we don't know exact day then when this get repaid. There is a foreseeable future for that to happen. But anyway, we have to repay. Therefore, even though owner puts money, we treat that as an internal liability and we separately identify under 5 categories. We have a separate name for that: equity. Equity is an internal liability. If you go to the double entry system, liability and equity, the same things: balance credit, increase credit, decrease debit. Liability and equity, because equity is also a liability. Even though in normal circumstances we cannot see equity as a liability, but in the long picture, in the bigger picture, one day this business organization has to repay the owner's capital when the business gets dissolved, right? Therefore, internal liabilities are known as equity. We separately identify those things, and next item is also equity. We have to explain that thing, and that is also will get repaid in one day. Apart from owner's capital, all other things fall into the external category, where external again will categorize based on time, non-current and current. Those things we cannot wait till the business dissolve. We have to repay those things in short run or long run. I hope it will clarify your questions. Clarifies. Then equity. I already explained this thing. Equity is the internal liability. Owner's capital. What business organization the amounts to be paid to owners, it will reflect the equity. In Sri Lanka, there are 3 categories of business, that is proprietorship, partnership and company. As credit officers, relationship managers, branch managers, you may have come across all 3 categories and their set of financial statements. Proprietorship, equity will get represented in the capital account. You have a capital account for proprietorship accounts to represent the equity. In partnership accounts, partnership financial statement, you have 2 accounts, capital and current accounts. All of these 2 accounts in respect of each individual partners will represent the equity. When it's come to company, stated capital plus reserves. Reserves means undistributed profits in the business will represent the equity part of the company. Equity also balance credit, increase credit, decrease debit. Owners claim on the assets, retained earnings, dividends, contributed capital. When it comes to dividends, your equity will get reduced. Right. Any questions? Any questions? Right. We'll move on to the expenses. Expenses are payments made or due to be made by an entity to generate income. When you want to generate income, you have to pay expenses. In a bank, the main income is the income, interest income from loans and advances. If you want to distribute or disburse loans and advances, you have to have money, right? Therefore, you have to ask for deposit from customers. Using deposit, you distribute or disburse advances. Through advances, you generate income. In order to generate interest income, you have to disburse advances. In order to disburse advances, you have to have money within the bank. For that purpose, bank asking for deposits from the general public. When you ask for deposit from the general public, you have to pay interest expense. Therefore, expenses means what you have to pay or due to be paid in order to generate income. In a normal business organization, your main income is sales. In order to generate sales, you have to purchase the stock. Therefore, main expense is the purchases. Right? Therefore, expenses are shown in the income statement. Normal category, expenses, balance debit, increase debit, decrease credit. Expenses can be categorized as follows. Based on the nature, recurrent and capital, right? In every country, every business organization, expenses can be categorized into recurrent expenses and capital expenditure. Even though we say capital expenses, in the big picture, we don't recognize capital expenses as expenses in the P&L. Capital expenses will always give an asset to the organization. We'll go to the differences of these two items. Capital versus revenue or recurrent expenses. Under capital expenses, not occur on a frequent basis. I will take two examples. For capital expenses, when you acquire a land, that is a kind of capital expenses. When you repay your electricity bill every month, that is a recurrent expenses. Right? If you take a land, not occur on a frequent basis. Every month you are not acquiring lands. But every month you have to pay electricity bills. Occur on a frequent basis under recurrent expenses. Expense value is material. When you purchase a land, acquire land, the value is material. But when you pay electricity bill, the value is not material. Recurrent expenses, value is not material. Under capital expenses, a fixed asset will be acquired. A non-current asset will be acquired. When you spend as a capital expenditure, asset, a non-current assets normally be acquired. But in case of recurrent expenses, when you expense that thing, there is no asset, right? These are day-to-day expenses. Real expenses are there. If you take the capital expenses, since an asset is acquired, finally it will get reflected in the statement of financial position, where all assets are reflected. But when it's come to recurrent expenses, finally it will get reflected in the income statement, P&L, right? Not in the balance sheet. Those are the differences. Then income. If you have any questions for expenses. Sir, please explain amortization. Amortization means if you have a big amount like expense, you are allowed to charge the P&L not only once in a period of time, say 5 years, 2 years, 3 years. Therefore, the the unamortized amount should be recognized as an asset. You are only charging a part of the expense. Right. Then we'll move on to the income. Incomes are received or due to be received by an entity via selling of items or offering services. Right? Main income of a normal business is sales. If you take an insurance company, the main income will be insurance premiums received. If you take a telecom company like Dialog, SLT, Mobitel, Airtel, the telephone charges you for prepaid and postpaid users, right? Different entities have different kind of income sources. Then incomes are shown in the income statement: balance credit, increase credit, decrease debit. Income can be categorized as follows. Based on nature, main income, based on nature, main income and other income. As I mentioned earlier, if you take a bank, the main income is the interest income from loans and advances. But if you take an example for a bank for other income, if a bank has a building and part of which have been rented out, in that case, the rent income will be a other income. Or bank has invested in some shares, the dividend income that they receive is other income, but main income is the interest income. Similarly, if you take telecommunication company, the main income means the postpaid and prepaid telephone charges, and other income might be the interest income. In a bank income statement, interest income is the main income, whereas if you take a telecom industry, the interest income might be treated as the other income. This is just an introduction for you to make proper understanding of the financial statements of different entities. Therefore, take into account every part of it, right? When you analyze the financial, now the main purpose of following this course not to pass the exam, but to use the knowledge in these sessions for practical purposes when you are actually practically analyzing the financial statements of different entities for lending purposes. These are the differences. Main income receive on a frequent basis, other income not receive on a frequent basis. Income value is material, whereas other income value is not material. Normally, main income will get reflected in the trading account, whereas the other income will be under the profit and loss account of the income statement. Right. Any questions? Up to now, any questions? ඔයාලට තේරුණාද? මොන හරි ප්‍රශ්න තියෙනවා නම් අහන්න පුළුවන්. ලබන සතියේ පන්ති 7ට පටන් ගන්නේ. අපි 10:10 වගේ ඉවර කරමු. බ්‍රේක් නෑ. Right. We'll go to the next slides. This is called accounting equation. Accounting equation will be based on the debit and credit. If we go to the double entry system, assets have debit, liabilities has credit, expenses have debit, income has credit, equity has credit. Therefore, if you take first equation, debit equals credit. Then come to the second one here, assets equal liability plus equity. Assets means debit, liability means credit, equity means credit. Therefore, again, debit equals credit. In the equation, one side is debit, other side is a credit. Right. To incorporate the other categories also, when it comes to equity, income minus expenses, revenue minus expenses, you call profit. That profit will get added to the equity. Apart from that, for equity, to increase, there can be capital contributions. And if you pay dividends or part of the capital, the equity will get reduced. That's why for equity, we have additional contributed capital. We have minus the dividend or other way of paying capitals. We have add the income or the revenues minus the expenses. Revenue minus expenses, profit follows, it will get added or deducted from the equity. That is the accounting equation. This is a further clarification on the accounting equation. Debit equal credit. Then debit side you have first assets. Then the credit side you have first liabilities. Then assets equal liabilities can be categorized into internal liabilities and external liabilities. Then assets equal internal liabilities, we have equity or capital plus external liabilities. Right? Then we incorporate income and expenses. Income minus expenses will get added or deducted from the equity. Then you have assets equal equity plus or minus profit or the income minus expenses plus liabilities. Right. Any questions up to now? Any questions? Very good class, right? No questions. ඔගොල්ලන්ට මොනවා හරි ප්‍රශ්නයක් තියෙනවා නම් ඕන විදිහකට අහන්න පුළුවන්. මයික් එක ඔන් කරලා අහන්නත් පුළුවන්. නැත්නම් මේකේ අර chat box එකේ දාන්නත් පුළුවන්. කැමති විදිහකට අහන්න පුළුවන්. Right. කට්ටිය මේක දාලා මේ ඉදිරිය දවසේ උයනවා එහෙම නෙමෙයි වෙන්නේ නැති කියලා මම හිතනවා. Right? Okay. Right. Why dividends deducted from the capital? Right. Dividends, all the profit. Dividend is not an expense. Dividend is a kind of a profit distribution. When you have profit, you add to the equity. When you pay some part of profit as dividend, you have to deduct. Dividend is a payment or distribution of profit. That is not an expense. Therefore, all the profits you have to add to the equity. When you are distributing, you have to deduct it. I hope I have answered your question. Any further questions? Right, we'll move on to the next set of slides. In accounting, this is the ledger account that we use to record the accounting transactions. In this account, you have 8 columns. First 4 columns represent the debit side. The second 4 columns represent the credit side. Date means the date of the transaction. Description means here, when you are debiting this account, the credit account's name should be written in the description column. Similarly, when you are crediting an account, in the description column, you have to name the debit accounts. Ledger page means the other ledger account, where the other entry you have posted in which page, the reference page number. Then the value is the value, rupee amount equal. Even though we say this is the ledger account, we normally use T accounts for in a examination purpose. There is no worry to follow the same format. Right. We'll take some examples and I need your feedback. Right. I need your feedback on these illustrations. Hope it will be a two-way communication sessions. I need you. Up to now, you have gave me a wonderful response. Same thing I am expecting. Right. Now, first transactions. Now I teach you the double entry system and basic accounting concept, all of it. Now whether you have understood correctly those concepts, now I want to know. Right? Whether your answer is correct or wrong, you have to give an answer. Right? That is my expectation. Otherwise, if you don't give any wrong answers, I hope that you all of you have correctly understood the concept. Right. Now the first example, Mr. J. J is the owner. He invested 20,000 rupees cash to start the business as capital. Now, what is the double entry? Here the answer is given. You debit the cash account 20,000. You credit the capital account 20,000. In the cash account, you wrote the name of capital account. In the capital accounts, you write the name of cash account. Now, my question is, why you debit the cash account? Why you credit the capital account? For this transaction, why you debit the cash account? Why you credit the capital account? Right, I need answers. If you want, I can show this slide again for you to get an understanding. I will give 1 or 2 minutes. Why we debit the cash account? Why we credit the capital account in respect of this transaction? Right, we'll go for the answers. Right, answers are coming. Capital increase, so it's credit. Cash reduces, so it's debit. Because it's related to equity. Equity increase credit. Increase of asset cash debit. Cash is asset debit. Asset will be increased due to that cash debit. Cash account is asset. Capital account increase, so asset increase debit. Equity increase credit. Equity increase credit. Cash asset increase. Cash is asset. Cash is asset debit. Cash account is an asset increase debit. Capital account is equity increase credit. Buddhima Sumudu. Cash is an asset, so increase of cash is debit. Capital increase is credit. Tilum asset balance is debit. asset increase debit, equity increase credit. Sarani, Charuka, equity will be credit. Padi, cash is an asset, increase debit. Alani, cash account is an asset to debit. Paja, Pajan, equity increases credit. Sanjay, cash is an asset. Cash asset increase debit. Inusha. Any other answers? දැන් අපිට මොනාරි දෙයක බේස් එක හරියටම දාගන්න ඕනේ. ඒතකොට බේස් එක හරියට දාගත්තම ඔයගොල්ලන්ට ඒක උඩට මේ තට්ටු ඕන තරම් ගහගෙන යන්න පුළුවන්. බේස් එක හරියට දැම්මේ නැත්තම් එක තට්ටුවක් නගිනකොට දැන් හැමදේම දැන් වෙලා තියෙන්නේ ෂණිකනේ ඉන්ස්ටන්ට් නේ. ඒක නිසා එහෙම බෑ. right? Cash is increase asset, capital increase credit. Cash increase so debit because it is asset. Anjana Gunasekar, cash asset increase debit, capital equity increase credit. Cash is a equity. Sorry, capital is a equity. Right. Okay. Now listen to me. Here, always think about all the transactions. I ask you to wear the glasses of the business. When you are seeing, when you are focusing on transactions happen in the business, always put the glasses of the business, not other spectacles. Right? ඒකට ඔයගොල්ලෝ මොන හරි දෙයක් ඔයගොල්ලෝ බලනවා නම් glass දෙක දාගන්න ඕනේ business එකේ. අනිත් කට්ටියගේ glasses නෙමෙයි. දැන් මොකද වෙලා තියෙන්නේ මෙතන? අයිතිකරු he has invested 20,000 cash to start the business. අපි business එක පැත්තෙන් business එකට මොනවාද ලැබෙන්නේ? business එකට මොනවාද ලැබෙන්නේ? මේ 20000 හම්බුණාම මොනවාද ලැබෙන්නේ business එකට? business එකට මොනවාද ලැබෙන්නේ මේ වෙලාවේදී? අයිතිකරු 20000ක සල්ලි දාලා තියෙනවා business එක පටන් ගන්න. ඒතකොට business එකට මොනවාද ලැබෙන්නේ? business එකට මොනවාද ලැබෙන්නේ? business එකට ලැබෙනවා සල්ලි cash ලැබෙනවා 20,000. එතකොට මම ඔයගොල්ලන්ගෙන් අහනවා cash කියලා කියන්නේ මොකද්ද? cash කියලා කියන්නේ asset එකක්. අයි අපි cash වලට asset කියලා අපි දැන් ඉගෙන ගත්තා. cash කියලා කියන්නේ asset එකක් කියන එක ඉගෙන ගත්තා. asset එකක characteristic ඒ ටික ඔක්කොම අපි ඉගෙන ගත්තා. cash අපිට income generate කරන්න උපකාරී වෙනවා වක්‍රාකාරව. ඒකට cash එක අපිට asset එකක්. ඊට අමතරව business එකට තව මොනවද ලැබෙන්නේ? කවුද මේ සල්ලි දාන්නේ? සල්ලි දාන්නේ අයිතිකරු. එතකොට ඒ අයිතිකරු දාන සල්ලි කවදා හරි දවසක අපි ගෙවන්න ඕනේ. In one day we have to repay that amount. එතකොට මේ අයිතිකරු නිසා මේ සල්ලි අපි කවදා හරි දවසක ගෙවන්න ඕනේ. එතකොට අයිතිකරු නිසා අපි ඒක ස්ට්‍රීට් කරන්නේ ඉක්විටි කියලා. ඒත් එක පැත්තකින් cash වැඩි වෙනවා. cash කියලා කියන්නේ වත්කමක් නැත්නම් asset එකක්. asset increase, go to the double entry system. Cash is an asset. Asset increase, double entry system එක කියලා කියන්නේ මොකද්ද? debit කරන්න කියලා ඒ asset account එක. ඒකෙන් තමයි cash account එක debit කරන්නේ. 20,000. ඒකට අපි capital account එක credit කරන්නේ 20,000 නේ. දැන් අපි cash account එක debit කරපු හින්දා අපිට ඉතුරු වෙලා තියෙන්නේ credit කෑල්ල විතරක් හින්දාද? ඒ හින්දා නෙමෙයි. capital කියලා කියන්නේ අපේ equity. අයිතිකරු සල්ලි දාන්න අපේ internal liability එක. එහෙම නැත්නම් equity එක වැඩි වෙනවා. So go to the double entry system. When equity increase, what is the entry? Credit entry. Capital is an equity. Equity increase. What is the entry? Credit entry. That's why we credit the capital account. හරි උත්තරේ එන්න ඕනේ Cash is an asset. Asset increase. That's why we debit the cash account. Capital is a equity. Equity increase. Credit the equity account. මේ transaction එක හින්දා cash උත් වැඩි වුණා, equity උත් වැඩි වුණා. Right. Okay. ගොඩක් කට්ටිය හරි උත්තරේ දීලා තිබ්බා. හොඳයි. අපි යමු ඊළඟ එකට. අංක 2. මම හිතනවා මේ slides එක ඔයගොල්ලෝ ගාව තියෙනවා කියලා. Right. Okay. Purchase stocks or suppliers paying 1,000 in cash for resales. අපි විකුණන්න බඩු අරගෙන තියෙනවා, purchase කරලා තියෙනවා. රුපියල් 1000ක බඩු සල්ලි දීලා අරගෙන තියෙනවා. Then you have the second entry number 2. Your purchases account debited 1,000. Your cash account credited 1,000. දැන් මම අහන්නේ ඔයගොල්ලන්ගෙන් ඇයි purchases account එක debit කරේ? ඇයි cash account එක credit කරේ? ගහගෙන යන්න උත්තර. මම ඒක ටිකක් ආයි දාන්න. Why we debit the purchases account? Why we credit the cash account? Right, in the interest of time, purchases expense, cash, asset reduce credit, purchases expense debit, purchase is expense, so it is debit from capital account, from capital account. Cash decreases. Right, okay. Thank you very much. We'll discuss this. You can revisit your answer. Why we debit the purchases account? Purchases is an expense. Our main expense is the purchases. Main income is the sales in a normal business. Main expense is the purchases. Therefore, expense increase. That's why we debit the purchases account. Go to the double entry system. Expense increase. What is the double entry? Debit that account. Expense account. Then when you give away the cash, cash is an asset. When asset reduce, asset decrease, you have to credit that account. Go to the double entry system. Cash is an asset. Asset decrease. Now credit karanna ඕන. Okay. Any other questions before we go into other areas? හොඳයි ගොඩක් කට්ටිය උත්තර දීලා තියෙනවා. Right. We'll move on to the next slides. Purchase equipment for 15,000 for cash. උත්තරේ තියෙනවා මෙතන. Equipment account debit, cash account credit. I want to know the reasons why we debit the equipment account, why we credit the cash account. Type your answers. Why we debit the cash account, why we debit the equipment account, why we credit the cash account. Number 3. Right, we'll look for the answers. ගොඩක් කට්ටිය හැර උත්තරේ දීලා තියෙනවා. උතන අපි බලන්න ඕනේ ආයතනයේ මොනවාද ලැබෙන්නේ මොනවාද යන්නේ. ආයතනයේ ලැබෙනවා ඉක්විප්මන්ට් එකක් ලැබෙනවා. කෑෂ් යනවා. ඒකට කෑෂ් කියන එක ඔයගොල්ලෝ දැනටම දන්නවා. කෑෂ් කියන එක ඔයගොල්ලෝ දන්නවා. ඒකට කෑෂ් කියන එක දන්නවනම් ඔයගොල්ලන්ට අහන්න පුළුවන් කෑෂ් කියන එකට මොකද්ද? කෑෂ් කියන්නේ වත්කම. වත්කමත් නැත්නම් ඇසෙට් එකක් අඩු වෙනවද වැඩි වෙනවද? ඊට ඉක්විප්මන්ට් කියලා කියන්නේ මොකද්ද? ඒකත් අපි දන්නවා වත්කමක් කියලා. නැත්නම් ඇසෙට් එකක්. ඒක වැඩි වුණාද අඩු වුණාද? ඒ අනුව තමයි ඩෙබිට් ක්‍රෙඩිට් අපි තීරණය කරන්න ඕනේ. right. ප්‍රියදර්ශනී දයානන්ද if you want to අත උත්සලා තියෙන යාට ප්‍රශ්නයක් අහන්න තියෙනවා නම් අහන්න පුළුවන්. නැත්නම් වැරදිලාද? right. Right, okay. We'll go to the answers. Most of them gave the correct answer. When you purchase equipment, equipment is an asset, long-term asset, right? When asset is increased, you have to debit that account. That's why we debit the equipment account, 15,000. When you purchase by way of cash, you have to give cash to the other company. Therefore, your company's cash position will get reduced. Cash is an asset. Asset decrease, credit that account. ඔයගොල්ලන්ට ලේසියෙන්ම ඩබල් එන්ට්‍රි එක හොයාගන්න කෑෂ් එක වෙලා තියෙන පැත්ත බැලුවොත් හරියටම තේරෙනවා මොකද කෑෂ් කියන එක හැම වෙලාවෙම ගොඩක් වෙලාවට යූස් වෙන නිසා. Right. We'll move to the next one. Here under transaction 4, there are two transactions. One is purchase stocks of 200 on credit. සල්ලි ගෙවලා නෙමෙයි ණයට අරගෙන තියෙන්නේ. Then equipment of 1000 on credit from A Limited. A Limited කියන එකෙන් equipment එකක් අරගෙන මේසෙ සල්ලි ගෙවලා නෙමෙයි ණයට අරගෙන තියෙන්නේ. If you take the first one, purchase of stocks on credit. Now number 4, purchasers debit 200, creditors credit 200. The purchasers debit වෙලා තියෙනවා 200 වලින්, creditors credit වෙලා තියෙනවා 200 වලින්. Then if you go to the second transaction in the transaction 4, equipment account debit 1000, A Limited account credit 1000. I want to know the reasons for these two. I we debit, why we credit. Transaction දෙකට වෙන වෙනම අපිට උත්තර හොයන්න වෙනවා. ණයට රුපියල් 200ක බඩු අරගෙන තිනවා නැවත විකුණන්න 200ක. ඒතකොට purchasers account එක debit වෙලා තිනවා creditors ලා credit කරලා තියෙනවා 200. ඊළඟට equipment අරගෙන තිනවා ණයට රුපියල් 1000ක A Limited කියන කම්පැනි එකේ. the equipment account එක debit වෙලා තියෙනවා, A limited ගේ account එක credit වෙලා තියෙනවා. Right. We'll look for the answers. Right. If you take the first one, you debit the purchase account 200, credit the creditors 200. Whether it is cash or credit, purchases is a purchases. Right? That is an expense. And when you purchase something, whether it is cash or credit, it will increase your expense. That's why we debit the purchases account. Debit the purchases account because it is an increase of expenses. Then since it was on credit, you need not to pay cash. You are committing a liability. After few days, we will repay that amount. Those liabilities are called, in this case, that liability is called creditors. When creditor is a liability increase, we have to credit that account. Go to the double entry system. When liability increase, you have to credit that account. The liability name is creditors. Therefore, we debit the purchasers account due to expense increase. We credit the creditors account due to liability increase. That is the first transaction. Then the second transaction, you acquire an asset. Asset name is equipment. Previously, you acquire 15,000 equipment on cash. In that case, you debit the equipment and credit the cash. But in this case, you acquired the 1,000 equipment on a credit basis. Whether it is credit or cash, you acquire equipment. Therefore, your equipment, your assets will get increased. Equipment is an asset. Therefore, your equipment account will get debited due to asset increase. This time, it is not on cash, it is on credit basis. The liability, you have a commitment. You have a commitment to repay this 1,000 in a future day. The liability name is A limited. That's why we credit the liability account, A limited account, 1,000. You can say A limited stroke creditors. A limited is a creditor. One day we have to pay that 1,000 amount. Right. We'll go to another example. Borrowed 4,000 from ABC Bank. පෙළ 4,000ක ණයක් අරගෙන තිනවා ABC බැංකුවේ. You debit number 5, fifth transaction. You debit the cash account 4,000. You credit the ABC bank loan account 4,000. Why you debit the cash account? Why you credit the ABC bank loan account? Very simple. Right. We'll look for the answers. When you take a loan, you receive cash. right? When you take a loan, you receive cash. Therefore, cash is an asset. Asset increase. When you take a loan, one day you have to repay that amount. That is committing a liability. When you commit a liability, liability increase. Therefore, that liability account will have to get credited. In the double entry system, when liability increases, we have to put a credit entry. Right? Good. Most of the people have given the correct answers. Cash account debit due to increase in assets. Cash is an asset, no? Have to debit. Bank loan account credit because bank loan is a liability. Liability increase. Right. Then I will show how to balance an account. Right? Accounts balancing and trial balance. Now, if you take the cash account, we had 4 transactions. In the debit side, you have 20,000 and 4,000, 24,000. In the credit side, 1,000 and 15,000, 16,000. Right? When you are to balance an account, you have to take the totals of both sides and take the higher total and balance the account and put the higher total in the both sides. Now, in this case, the higher total is in the debit side, in the cash account. Therefore, we balance the accounts and put 24,000 in the both sides. And take the difference from the credit side. 20,000 is the debit side total. You take the credit side, 16,000 is there. Therefore, the difference is 8,000. 8,000 is the difference. Right. This is how an account will get balanced. Then, in the same way, if you balance all the accounts, if you take the balances of all the accounts, you can prepare a trial balance. This is the trial balance for the aforementioned transaction that we have taken. To take the cash account, 8,000 we have already there. Capital account, 20,000. Purchases, 1,200. Equipment, 16,000. Creditors, 200. A limited, 1,000. ABC bank account. Right. If you have correctly debited and credited the account, their trial balance will get tallied. Right. For a trial balance to tally, the only logic is whether you correctly debit the account or not. It is only thing that the same amount, the equal amount, when you debit an amount, the same amount has to be credited to get the trial balance. Right? That is the only logic. Whether that debit and credit entry in the right account, it does not matter. Right? To get a trial balance, right? The only requirement is you have a debit entry and equal credit entry. If that happens, your trial balance will get balanced. But there can be cases where incorrectly accounted even though trial balance is balanced. For example, say this is the last transaction, ABC loan account. Instead of debiting the cash account, say you debited the debtors account. Instead of debiting the cash account 4,000, you debited the debtors account. Accounting is incorrect, but the debit credit the equal amount to the debit side and the credit side. Then your trial balance will balance. But there are errors. Right. Any questions up to now before we move on to the banks related transactions? What is the 8,000 used to balance the previous account? 8,000 is the difference between the debit side total and the credit side total. If you take the debit side, 24,000 is there. Right? 24,000, 20,000, 4,000, 24,000. We put the highest total. If you go to the credit side, only 16,000, 1,000 and 15,000. 8,000 is the difference between 24,000 and the 16,000. That's how you balance an account, right? You rule the balancing account and thereafter take the highest total, whether it is credit side or debit side, you take the highest total. In this case, in the case of cash account, the highest total in the debit side, that is 24,000. We put the highest total into the both side, 24,000, 24,000, take the difference. 24,000 and 16,000, difference is 8,000. That's how 8,000 came. That is the balance of the account. That is balance carried down 8,000 credit, balance brought forward 8,000. If you take the balance of an account, it is the balance brought forward. Balance brought forward, not the balance carried down. If you ask a question, what is the balance of this cash account? We have to say debit 8,000. Debit 8,000. Right. Any other question? තව ප්‍රශ්න තියෙනවද? Right, we'll move on to the next part of the slides. This is relating to banks transaction analysis, right? When a customer makes a deposit 4,000, how do you account? Your teller cash will get debited and customer deposit account will get credited. I want to know the reasons why you debit the teller cash account, why you credit the customer account. Give me the answers in the text. Why you debit the teller cash account, why you credit the deposit account of the customer. Give me the answers. ඔයගොල්ලෝ මේ බැංකුවට ජොයින් වෙච්ච දවසේ ඉඳලම ඔය එන්ට්‍රි එක දානව නේද? පොඩි දැන් ඔයගොල්ලෝ වයස නම් ඔයගොල්ලෝ දැන් දාන්නේ නැතුව ඇති. නැත්නම් ඔයගොල්ලෝ ජොයින් වෙච්ච දවසේ ඉඳන් ඔය එන්ට්‍රි එක දානවා. එළ කෑෂ් එක ඩෙබිට් කරනවා, කස්ටමර් account එක ක්‍රෙඩිට් කරනවා. මං අහන්නේ මොකද එහෙම කරන්න කියලා. Why you debit the teller cash account, why you credit the customer account, customer deposit account. Right, අපි බලමුද? ඔයගොල්ලන්ට මේ එකම විදිය මේකේ ටෙක්ස්ට් බොක්ස් එකේ ගන්න දෙනවා මයික් එක අන්මියුට් කරලා ප්‍රශ්න අහන්න පුළුවන්. Teller cash is what? Teller cash is asset. To take cash in a bank, cash is in different forms. You have vault cash, you have ATM cash, you have cash in teller boxes, you have CCD, central cash deposit unit cash, right? In different modes, you have cash. One of the ways the tellers are maintained in their teller boxes, we call teller cash. That is an asset to the bank. When a customer makes deposit, your cash position will get increased. Cash is an asset to the bank. That's why we debit the teller cash account. Then why we credit the customer deposit account? Because we are only left with the credit entry. No. Once the customer makes a deposit, one day he comes and asks for that deposit. When we accept a customer deposit means we are making a commitment to repay that amount plus interest. Therefore, accepting customer deposit means you are committing a liability. Customer deposit is a liability. Increase in liability, you go to the double entry system, increase in liability, you have to put a credit entry. එතකොට ටෙලර් කෑෂ් කියලා කියන්නේ බැංකුවේ වත්කම සල්ලි හම්බ වෙනකොට වත්කමක් වැඩි වෙනවා. වත්කම් වැඩි වීම ඩබල් එන්ට්‍රි සිස්ටම් එකකට අනුව හරසටහන. කස්ටමර් ඩිපොසිට් කියලා කියන්නේ කවදා හරි දවසක කස්ටමර්ට ওই සල්ලි ටික අපි ගෙවන්න ඕනේ. ඒකට ඒක ලයබිලිටි එකක්, වගකීමක්. ඩබල් එන්ට්‍රි සිස්ටම් එකට අනුව වගකීමක් ඇති වෙනකොට වගකීමක් වැඩි වෙනකොට අපිට දාන්න තියෙන්නේ බැර සටහනක්. එහෙම නැතුව ටෙලර් කෑෂ් හර වෙච්ච හින්දා කස්ටමර් ඩිපොසිට් බැර වෙනව නෙමෙයි. Right? But when you were in the induction, the person who gave instruction for you to debit the teller cash, for you to credit the customer deposit, should have been explained the way I explained to you. Right? එහෙම වුණා නම් ඔයගොල්ලන්ට ගොඩාක් හොඳට ඔක තේරෙන්න ඕනේ. Right? එතකොට accounts කියන එක එදා පටන් ගන්න ඉන්ඩක්ෂන් එකේ තමයි දෙන්න ඕනේ. එහෙම නැතුව කියන්න එපා මේ දැන් ඔයගොල්ලෝගේ කවුරු හරි ඔයගොල්ලෝගේ පල්ලෙහාට අලුතෙන් ආපු කවුරු හරි කෙනෙක් ආවොත් එමේ කොහොමද මේ කස්ටමර් කෙනෙක් කියලා සල්ලි දැම්මුත් එම් මොකද කරන්න කියලා කියන්න ඕනේ. ටෙලර් කෑෂ් ඩෙබිට් කස්ටමර් ඩිපොසිට් එක ක්‍රෙඩිට් කරන්න කස්ටමර්ගේ account එක ක්‍රෙඩිට් කරන්න කියලා. ඒතර ඒ ළමයා ඇහුවොත් එමේ ඇයි එහෙම කරන්නේ? ඒ ටෙලර් කෑෂ් ඩෙබිට් කරන්නේ කස්ටමර්ගේ account එක ක්‍රෙඩිට් කරන්න කිව්වා. ඒකට අපිට කියන්න වෙන්නේ එහෙම තමයි අපිට කියලා දීලා තියෙන විදිය. හැබැයි එහෙම වෙන්නේ මෙන්න මේ හේතුව නිසා. Right? You should have explained the way I explained to you for your juniors. Right. Next thing, the other way, that is customer withdraws 2000 from the counter. Customer ගේ deposit account එකේ 3000ක් තියෙනවා දැනට ඒකෙන් 2000ක් අරගෙන තියෙනවා. එතන මොකද වෙන්නේ? බැලුවොත් මොකද වෙන්නේ? From the bank's point of view, we have to give cash to the customers. The cash කියලා කියන්නේ again our asset. Asset decrease නම් credit entry එකක් කියන්නේ. The teller cash එක්කෙනාගේ account එකට credit එකක් යනවා 2000. And by paying 2000, our commitment will get reduced. අපි යාට 2000ක් ගෙවුවට පස්සේ ආයෙ දවසක 2000ක් ගෙවන්න ඕනේ නැහැ. එයාගේ account එකේ 3000ක් තිබ්බ දැන් උන 2000ක් ගෙවුවා. 2000ක් ගෙවුවම අපේ liability එක අඩු වෙන්න ඕනේ. You are reducing your liability. Liability account, balance credit, increase credit, decrease debit. That's why we debit the customer deposit account. You debit the customer deposit account while liability reduce. You credit the teller cash accounts while your assets decrease. Asset decrease credit entry, liability decrease debit entry. අපිට මේ කියන්නේ ලූකා පැසියෝල් එකේ ඩබල් එන්ට්‍රි සිස්ටම්. All right. Any questions? Do you have any questions? Right. Thank you, Charuka. Right. We'll go to the next set of slides. If you have any questions, you can ask. Right. Next thing, I would like to touch upon a few things on the primary books or primary day books. Now, these books are normally in the business organizations. If the number of transactions are high, when you are not in a position to update the ledger account instantly when the transactions happen. In that case, you initially record all the transaction in these sets of books called primary books. Thereafter, after some time on a weekly basis or monthly basis, you convert the summary of the transaction recorded in the primary books into ledger accounts. Right? Since we don't have enough time to discuss each and every of these primary books, I will give some notes only. To take the categories, the main primary books is the cash book. Cash book can be of single column, double column, or triple column based on the need. If you take the single column, there is only cash transaction, that is notes and coins transactions. If you take the double column cash book, you have to open double column cash book where you have notes and coins plus the checks, right? In that case, you have to open the double column cash book. If you take the triple column cash book, uh, uh, in addition to the cash and checks, if you give discounts to debtors and if you receive discount from creditors, in order to record those things, you have to have a triple column cash book, right? Then you have purchase day book, sales day book, return inward day book, return outward day book, petty cash, and main journal. Each of these primary books have different purposes for which we use these primary books. And as mentioned earlier, some primary books are maintained on the double entry systems. Therefore, need not to convert on a regular basis the double entries from the primary books to the ledger. But in case of purchase day book, sales day book, return inward day book, return outward day book, those are not updated based on the double entry system. In that case, on a periodic basis, the summary of the transaction should be converted into the double entries and update the ledgers. Right. I have also given few formats. This is the format of a single column cash book. Then every primary book has a kind of a source document. If you take a cash book, the single column cash book, the main source documents are in respect of cash receipt. A cash receipt book should be there and cash receipt number should be there. And in case of payments, a cash payment voucher should be there, right? A payment voucher supported by all the source documents, right? And if you go to the double column cash book, as I mentioned earlier, instead of cash, you are using checks. Therefore, for the debit side, cash receipt book is there. But if you take the credit side, instead not only the cash payment vouchers, for checks also, payment voucher should be maintained and all the supporting documents should be attached to the payment voucher. The format is given. Then triple column cash book, as I explained earlier. Normally triple column cash books are open when you allow discounts and when you receive discount from creditors. When you allow discount to debtors, if you have a lot of credit business, in that case, in order to record the discounts received and discounts allowed, you have to have separate columns. The way that we update these books in a different nature, I don't have any time to explain these things. The better thing is to, if you have any brothers or sisters who are doing A level under commerce stream, there are enough examples each of these primary books. Then purchase journal. Purchase journal is normally we use when you have credit purchases for resale. In that case, you have to initially record all the transaction in the purchase journal. After sometime on a weekly basis or on a monthly basis, convert the summary of the transaction into ledger accounts. The main source document for purchase journal is the purchase invoice. This is not maintained on a double entry basis. You have to just record the transaction here, and on a periodic basis, you convert the summary of the transaction into the ledger accounts. But when you are a credit manager, when you are a relationship manager, you have to have some understanding about the clients, the way they are recording the transaction, whether they are using purchase journal, whether they are using sales journal, whether they have single column, double column, or triple column cash book, how they maintain the segregation of duties, whether they are using receipts book, whether they are using payment vouchers. You have to have some kind of understanding and the control environment where the accounts are being prepared, and whether they don't have a proper mechanism, whether they don't have a qualified accountant to prepare these accounts, whether the all the transactions just merely happening, and whether they do have good governance there. That kind of understanding you have to visit there, you have to ask questions, you have to use a questionnaire. If you cannot visit there, and if you can visit there, you can physically verify those controls and the documents. If you cannot visit there, you have to have a kind of a questionnaire to get some information about the way the system of collecting, recording, and analyzing the account, with the whole set of accounting process are happening in the client place. That will help you to understand, getting information, the validity of the information, and the amount of the judgment that you can place on the accuracy of the figures. Those can be well established if you have a good understanding of the process where the financial statements are prepared. Similar to the say purchase journal, sales journal is there. Normally we record all the credit sales for resales in the sales journal. The main document we use is the sales invoice to record the transaction here. This is also not maintained under double entry. On a periodic basis, the summary of the transaction will get updated in the ledger accounts. Then return outward means whatever the purchase item, for any reason, if you return them to the original supplier, those will get recorded in the return outward journal. If you take the reasons for returning the things, the order might be what you order and what you receive. There can be differences based on the quantity, based on the quality, based on the names of the products. If you order something, if they have give a different brand, that might be the reason for returning. Due to some damages, some if the items are expired, that will also get might be a reason for this returning of goods. Whatever the purchase goods, if you are returning, those things will get updated in the return outward journal. Then return inward journal, the other way around. That is, in case of sales, once you sold the items to your customers on credit basis, after some times, due to some reason, if they return those items again back to you, those are recorded in the return inward journal. The same reasons can be reflected for returning the items. That is, different quantities, different qualities, different brands. There can be damages, right? Then this is the format of a petty cash book. Apart from the main cash book, people tend to update the petty cash transaction, the small amount transaction in the petty cash book. There can be separate cashier for the petty cash involvement. This is the normal format. If you do want, you can have under analytical column, you can have different columns here. Petty cash book also maintained under double entry system. If the time permits, if we can have some example of petty cash, that will be the good. But since we don't have that much of time, we have to bear with this format. If you do have any other thing, please ask. And finally, the main journal. If you take the cash books, single column, double column, triple column, and the purchase day book, sales day book, return inward, return outward, petty cash, there is a specific reason for you to use that particular this day book. But if you don't have any particular reason to record anything, you have to use the main journal. There we normally record 5 categories of transactions, that is opening entries, then credit purchases and sales of non-current assets, then rectification of errors, then closing errors and adjustment entries. Sorry, closing entries and adjustment entries. Those 5 categories normally will get recorded in the main journal. The journal voucher is there. That is the main source document to record the transaction in the main journal. Right. Then if you take the financial statements of a business organization, there is a financial statement preparation process. Normally, in a given year, you record all the transactions in the ledger account. When it comes to the year end, you have to assess the certain entries. You have to put forward the closing entries, and you have to do the adjustment entries. After that, you have to prepare the financial statement by extracting a trial balance. Then in a normal proprietorship partnership organization, the main 2 financial statements are the income statements and statement of financial position. Normally, they do not prepare the changes in equity and the cash flow statement, but we can encourage them to prepare them. Those are very easy to prepare. And they also reluctant to have the accounting policies and accounting notes. Normally, these people don't have separate accounting department. They tend to take all the statements from you and take those things to a accountant, and at the end of the year only they prepare the financial statement. That is not good, right? Then those some accountants are also using this bank statement. They just only prepare the financial statement and hand it over to these entities. And once they submit to the Inland Revenue Department, when they ask certain questions, when they ask certain queries, and if the entity fail to give the right answers, they will issue assessments also. In that case, the business entity will get affected, and they go here and there to rectify those assessments. Otherwise, because they might be in trouble. and they tend to give some money and give some bribes to take off those assessments, and that is not the way. And they are not worried about the business. Thereafter, they are worried about the to get rid of these kind of things, and the focus might be lost. Therefore, what you can encourage these people, especially the proprietorships and partnership, not only your credit plus something, that is encouraging them to record all these transactions, collect all these transactions, record all these transactions, and to prepare the accounts on a monthly basis and to submit the proper accounts, right? And if you don't have the proper mechanism, at least to accommodate a partly qualified accountant to record those transactions, right? There are enough number of students. If you take the following chartered, SEMA, those who are in the universities, those who are following AAT courses, there are enough number of people in the industry, in the country, to facilitate these requirements. They don't ask much remuneration for these things, right? Therefore, what you have to encourage your entities owners to have at least a part-time accountant to prepare these accounts and use their knowledge to benefit the organization. This is not only benefiting the inner revenue department or submitting the documents to the inner revenue department. Use this accounting information to take decisions. Otherwise, your total decision-making process will get erroneously done. Right? If you don't know what is the income, if you don't know what is the income, but if you don't know what is the expenses, if you don't know what is the assets and liabilities, equity amount, how can you take the correct decision? Can you remember all of these transactions? As bankers, you have to encourage, give the credit plus thing, not only the credit plus thing, right? After carefully evaluating the business organization, if you can visit there, if you can give advices, right? Go and visit there, get a kind of a updation, advise them to accommodate at least a part-time accountant to prepare the accounts on a monthly basis. That will benefit both the bank and the organization at large itself, right? I have enough number of examples where the business organizations are more focused on the accounting aspect after they receive assessment from the inland revenue department. They totally forget about the business. They go here and there to escape from those assessments, right? And spending millions of millions to rectify those issues, right? The best thing is to not to hide anything, but to have a proper mechanism to prepare accounts, update, and benefit both the organization and the bank as well, right? Therefore, preparation, the financial statement preparation, financial statement, and the process, you have to have as credit officers, you have to have a good understanding also. Have a chat with the clients to get an understanding whether it is in writing by way of questionnaires or by way of visiting the client place. You have to have a good understanding on that. Right. Then in the previous slide, I talk about an accounting standard. I wish to give some brief on accounting standards. If you do have any questions, so how do you record return items in books? What is the double entry? When you sales, when you return items in books, I hope this question, Chaturika Pereira, right? I hope this is in relation to when you purchase and return, right? When you purchase some item, your purchases will get debited. If it is on credit basis, you have to credit the creditors, right? When you return out of the purchases for a reason, you have to debit the creditors because your liability will get reduced and credit the return outward. That is a decrease of your purchases. Ultimately, at the end, when you prepare the financial statement in the trading account, purchases will be deducted the return outwards, right, to get the net purchases. Or either you can credit it to the purchases account, but the normal accounting is you have a separate account called return outwards. You credit the return outward to that account and debit the creditors if it is on credit basis. So please repeat the 5 categories that are recorded in the main journal. Thank you. 5 categories. If you take the 5 categories, first one is the opening entries. Opening entries means when you open a business, if you put some asset, liabilities and equities, those things will have to be recorded in the main journal and before you go, record it in the ledgers. That is opening entries. Not only that, opening entries also by way of after completing of year, when you go to a new year, you have to put assets and liabilities and equity items in the ledger account. Initially, you recorded those things in the journal. Thereafter, the ledger account, because income and expenses won't go to the next year. It will only confine to a particular year. Then the second category is purchasing or sales on credit basis the non-current assets. Purchasing or sales on credit basis the non-current assets. Normally, if it is on cash basis, you can update in the cash book. But in case of credit basis purchases or sales of non-current asset, if it is normal goods of sale, you have a sales journal and the purchase journal. But if it is non-current assets on credit basis, purchases and sales, you have to update through main journal. The third category is correction of errors. When you do accounting, you come across a lot of errors. When before rectification of those errors, you have to update the main journal. Thereafter, rectify the errors. Right. Then the number 4 is closing entries. That is, at the end of the year, your income and expenses should be 0. In the expense account, you have a debit entries. You have to credit that account, 0 that account, and put that to the P&L. In the same way, in the income account, you have credit entries, credit balance. You have to debit the income account and credit that to the P&L. Therefore, the entries that you put to 0 the income and expenses at the year ends are called closing entries. After closing entries, your income and expenses will get 0. Next year, the balances will become 0. All the income and expenses will be transferred to the income statement, where in the income statement, you calculate the profit or loss. Then the final entries are adjustment entries. Adjustment entries are entries that you need to incorporate to correctly calculate the profit, like closing stock, like depreciation, right? Like accrued expenses, right? For example, I will take, if you take the your financial year ending 31st December, say 2020, your financial year ending 31st December 2020, if you take the electricity bill, 2020 December electricity bill, even though that electricity expense spent to generate income in 2020, that bill, electricity bill, will receive in 2021 January. And you might pay that bill in 2021 February, right? If you don't take into account the electricity bill for 2021, December electricity bill for 2021, your PNL will be incorrect. If you wait till the payment is made, the payment will be made in 2021. But the real expenditure spent to generate 2020 income. Therefore, even though cash is not paid, we take that as an adjustment entry in 2021 financial statement preparation process. right? What we do is we debit the electricity expense account and credit the accrued expense account, right? Year end 2020, we treat that expense as a accrued expense. We debit the electricity and credit the accrued expense accounts. By doing so, we recognize the expense in the year in which it has actually incurred. Even though it has not been paid, payment has been made in the following year, but the actual expenditure incurred in the 2020 to generate 2020 income. That is a kind of adjustment entry, right? Another entry is the closing stock. You know closing stock, how to incorporate. Those are also closing stock also. Initially, you recorded in the main journal. All the adjustment entries initially recorded in the main journal. Those are the 5 entries. Opening entries, then the purchase and sales on credits of non-current assets. Then number 3, rectification of errors. Number 4, closing entries. Number 5, adjustment entries. Right. Right. We'll go to the final two slides of the day. That is accounting standard. If you take the accounting standard, I will take a very simple example. මම මෙහෙම කියන්නම්. අපි බාස්ලා දෙන්නෙකුට එකම ඉඩම ප්‍රමාණය දෙනවා. හිතන්නකෝ purchase 10 දෙනවා ගියක් හදන්න කියලා. බාස්ලා දෙන්න. ඒ දෙන්නට අපි දෙනවා එකම සිමෙන්ති, එකම ගල්, එකම වැලි, එකම ඔය sheets, එකම ලී, ඔක්කොම ටික එකම size එකට එකම ප්‍රමාණ වලින් දෙනවා ගියක් හදන්න. කිසිම දෙයක් කියන්නේ නැහැ. ඊට අවුරුද්දකට විතර වගේ පස්සේ ඇවිල්ලා අපි ගේ හැදෙව හැටි බලනවා දෙන්න. එක්කෙනෙක් හදලා තියෙන්න පුළුවන් තට්ටු දෙකක ගෙයක්, අනිත් එක්කෙනා හදලා තියෙන්න පුළුවන් තනි තට්ටුවක ගෙයක්. එක්කෙනෙක් හදලා තියෙන්න පුළුවන් කාමර 5ක ගෙයක්, අනිත් එක්කෙනා කාමර 4ක ගෙයක්. එක්කෙනෙක්ගේ ගේ හැම කාමරයකම attached bathroom තියෙනවා, අනිත් එක්කෙනාගේ කාමරයක විතරයි attached bathroom තියෙන්නේ. එක්කෙනෙක්ගේ dining room එක ලොකුයි, අනිත් එක්කෙනාගේ පොඩි. එක්කෙනෙක්ගේ kitchen එක ලොකුයි, අනිත් එක්කෙනාගේ පොඩි. right? හැබැයි අපි එහෙම කරන්නේ නැතුව ඒ දෙන්නට අපි කිව්වොත් එහෙම මෙන්න ඕ දෙන්නට ඒ හදන සැලැස්ම කියලා විතර plan එකක් දුන්නොත් එහෙම ඒ plan එකේ තියෙනවා ඒ තට්ටු දෙකේ ගියක් වෙන්න ඕනේ, කාමර 5යි තියෙන්න ඕනේ, මෙන්න මෙහෙම attached bathroom තියෙන්න ඕනේ. එහෙම කියලා තිබ්බොත් එහෙම අවුරුද්දකින් ඇවිල්ලා බැලුවොත් ඔය අර කලින් විදියටම මොකද වෙන්නේ? ගේ 100%ක්ම ගෙවල් දෙක සමාන නොවුනාට plan එකට අනුව දෙන්නම හදලා තියෙන එකම plan එක නම් දීලා තියෙන්නේ 100%ක්ම සමාන නොවුනාට ගෙවල් දෙක ගොඩක් identical විදියට තියෙනවා. That plan is the accounting standard. To take accountants, if they don't have any guidance to prepare the financial statements, the accountant will prepare their own way to prepare the financial statements. There can be errors, omissions, misappropriations. There can be one smart guys, right? They want to hide some profit. Different things can happen. But if you have kind of a standards incorporated and published and ask them to follow these standards when preparing accounts, all of the accountants, by and large, not 100%, will follow the accounting standard and prepare the accounts in the same way. Why we have incorporated the accounting standard? After you incorporate the accounting standard, everybody prepare the accounts in the same way, and the accounts of different organizations can easily be compared and contrasted. Right? For this, there is a accounting standard committee in the CA Sri Lanka, Chartered Accountants of Sri Lanka, and previously these accounting standards are known as SLA, Sri Lanka Accounting Standard. Now they are known as SLFRS, Sri Lanka Financial Reporting Standard, and LKS, Lanka Accounting Standard. The main authority to publish new accounting standard, 2 amendments incorporate to the existing accounting standard, or to abolish the existing accounting standard are with the responsibility of the ICSL, Institute of Chartered Accountants of Sri Lanka, where they have appointed a separate committee called Sri Lanka Accounting Standard Committee. And this committee comprised of different bulkies from the Institute Chartered Accountants, and they have representative from the central bank, they have representative from the SIMA, they have representative from the Ceylon Chamber of Commerce, Federation of Chamber of Commerce, and they have representative from the company register and different other entities. This committee has power to implement new accounting standard, to make amendments to the existing accounting standard, or to abolish the existing accounting standard. Once they do all of these activities, they will prepare a document and send it to the council of the ICSL, that is Institute of Chartered Accountants of Sri Lanka. Once the council approve these accounting standard, it will put forward to the parliament, right? Normally in the parliament, most of the items will get discussed and arguments happen. But when it comes to these accounting standards, nobody will argue with the accounting standard in the parliament, whether it is government side or the opposite side. All of the people, they have put vote to the accounting standard, and they will get approved. Once it is approved, it will get gazetted and become part and parcel of the law in the country. Therefore, all the accountants, all the business owners have to follow these accounting standards when they prepare the financial statement. In addition to that, there are some Company Act requirements, there are some Security Exchange Commission requirements, there are some Banking Act requirements when you prepare your financial statements. Right. Then the last slide. Now in 2012, 1st January, there was a huge change made into the accounting system, that is previously known Sri Lanka accounting standard. The old accounting standard SLAs were replaced by SLFRS, Sri Lanka Financial Reporting Standard, and LKS. This was implemented in 1st January 2020, right? After that, now all the accounting standards are of two ways. Either it is a SLFRS or LKS, right? Now this is I hope today I gave a bit of a background and kind of a introduction to the accounting, and I hope you have benefited with the first lecture. And next week, when we are taking the analysis of a financial statement, this first session will be of use for you to understand whatever the things I am going to teach in the next time. And up to now, anything, if you have any question, any clarification, you can ask now. Otherwise, we will wind up the session. If you do have any questions. Next week, I will again tell you, we'll start the session at 7 a.m. and it will go 10:30 without any breaks, right? If you don't have questions, we can wind up the session. Okay then. Thank you very much. Stay safe.